What's up, traders? Welcome to this week's episode of the Weekend Crypto Report, where as always, I do a technical analysis and give you my thoughts on the coins listed up above, and we will recap the Ripple trade that is actually ongoing, and there's a secondary entry if you haven't gotten in already, which we will discuss. So, kicking things off on the weekly time frame chart of Ripple, what do we see here? Last week's bar did end up closing firmly green up towards the highs and well above the double bottom neckline here from the weekly, and also over our interest level from the daily time frame chart. So bullish from that perspective. The weekly bar that's currently trying to close out is also a bullish indication in my perspective. It is a hammer candle, right? We've got a long lower wick. We went underneath the level and now we're back above for a decent close. It's also an inside bar, right? So this obviously is contained within the range of the prior weekly bar. So that does strike me as a bullish setup here, even from the weekly perspective, right? If we think about what could happen here, breaching the hammer high should at least take us for a test of the high of the green bar, if not move us all the way into our weekly target coming from the prior support area in here and daily breakdown level from right around over here as well. So weekly chart does look good for the trade thesis to continue to unfold in the right direction. Let's take a look at the daily time frame chart and see what ultimately ended up happening. In last week's episode, we talked about the possibility of a flag up here breaking a trend line would be attractive for a setup to the upside, or a pullback into 44 cents would also be attractive coming from the top of this bear flag, right? And what ended up happening, right? Obviously, we had a couple of inside bars here. We never broke to the upside. Instead, it was lower. But look at what happened. We did end up printing that hammer candle right off of 44 cents, as we outlined in last week's video. So what's the trade setup, right? It's long over the hammer high, stop under the low, and target is up here. Does that make sense from a risk-reward perspective? Certainly does. You're dealing with like a 2.5 to 1, 3 to 1 risk-reward ratio. So good to go, green light for the trade. If you're not in already, what's the next sort of entry that we just mentioned? Well, we're currently building almost the same exact setup on the weekly time frame, but here on the daily, right? Think about this green bar as the weekly green bar and this as the weekly hammer, right? It's very similar. We have an inside bar. It's a little digestion doji. It's nothing really overly concerning. It's not a large red-bodied bar that would indicate breakdown. It's really just consolidation after a move higher. If we can take out the inside bar high, you're still looking for that target up ahead, but this time your stop is going to go underneath, and it has to be that way because you need to keep your risk reward intact, right? This is reasonable because, again, we're looking at roughly I don't know, this one might be a little bit less, closer to the 2.5, more firmly a 2.5 as opposed to a 3 to 1. But there's your 2.5 to 1, 2.5 to 1, whatever. But the stop has to go here. You can't afford to put it underneath the hammer low because if you do, obviously your risk reward starts to get inverted, right? Now you're dealing with like a 0.8 maybe it's 1-to-1 risk reward, which is obviously a no-go for the trade. So if you're not in already and you do believe in this idea, you want to participate in Ripple to the long side, I would watch for a breach of this candle high, stop under the low, and the target would still be the same up at the top of the range there, roughly 58 cents. So continues to look great. Daily time frame looks good. If you're in from the breach of the hammer high, you should have no qualms about this. If you want to move your stop to break even, I suppose you could, or you could just bump it up to being slightly underneath 44 cents so you're not risking the hammer low anymore now that we've firmly broken out over the top side. That is completely up to you. Again, this is, take this trade at your own mercy. This could easily flop back lower. We don't know what's going to happen, so please be aware and manage your own risk depending on your entry from this setup. But so far, so good. The trade is working as we described in last week's video. If that all sounds good, let's dive into Bitcoin on the daily time frame chart now and see what continues to unfold here. This actually is still bearish, right? There's no doubt about that. Sure, we've got higher lows going on, but look at what's happened excuse me, with multiple upper wicks here. Big failed breakout, big failed breakout. We had back-to-back hammers, green hammer, green hammer. We took out the hammer highs, and we never got any follow-through to the upside. Sure, we made the move, but are we about to close the daily bar up there? Absolutely not. We're actually back underneath the level right here at 19,500. So, for all intents and purposes, this seems to me like two big failed breakouts, 1 and 2, and if we get back down into this 18.6, I would look for that to break and take us lower into $16,250 per coin. This might make a little bit more sense from the weekly time frame chart. If I just pop this on auto, then we'll do something like that. You can certainly see that we've got bear flag consolidation going on the weekly, and also an inverted hammer is forming here. Again, that upper wick indicating those two fake breakouts to the upside we just discussed on the daily. If this is going to turn into a weekly double bottom, that's fine, but be patient and wait for the breach of the neckline here, which is way overhead at 23,850, right? So a long ways to go before this weekly chart even thinks about flipping back to the bull side. Let's take a look at Ethereum. Ethereum. Just, we'll keep it on the weekly chart for now as well. This one is actually quite bearish. Reason being is you can think of this as a double top. Obviously, it's a lower high double top, but we are underneath the neckline. We made the new lower low, and we're getting acceptance little dojis at the bottom here instead of snapping back up towards that trend line. So this does strike me as bearish on the weekly time frame chart, although we are not here. Like Bitcoin is trading around 1,000 on a relative basis, in terms of structure. Obviously, Ethereum is slightly higher, a little bit of relative strength, but overall on the daily chart, is there any reason to be looking for a long here? Not really, right? You've still got that same sort of sentiment with the two fake breakouts to the upside. We are underneath all of those hammer highs. So I would be watching for a breakdown of 1250 to get us to that 1,000 mark here inside of Ethereum. If it just wants to play ping pong in here, that's fine. The bullish trade is only on a higher low back above that neckline we just saw from the weekly double top that looked something like this. The number is 1430. Let's continue along. Binance Coin, what's happening in this one? This is actually, quite bearish as well. Sure, there's a little bit of a break of the trend line going on here, but think about what happened, right? At one point in time, this inverted red hammer was a, large green bodied bar indicating a momentum breakout. But did it have any legs? Did we go anywhere? Did we get a strong confirmation close? Absolutely not. And we're actually falling back down to the trend line, and there's the possibility that we could close underneath in this Friday bar. So that to me seems like a fake breakout, which aligns perfectly with what we've been seeing in Bitcoin and Ethereum as well. So I would not be bullish here inside of Binance Coin. Sure, you've got the possibility for higher lows going on, but the breakouts are really just getting stuffed. I would want to see a firm daily bar close above 286.40 before even thinking about taking this rotation into the next resistance here around 301, 300 psychological. Anything that continues to chop around in here is exactly that. Chop, I would not look to get involved. If it breaches 262 on the downside, there's your rotation into 243. Next up is Cardano. I would continue to advocate to not touch this thing. The range is absolutely pathetic, and it does honestly look bearish underneath this 43, 42-ish cent mark. Obviously, your reasoning is that we've just got continuous lower highs, fake upper wicks. The bulls do not have it going on. Cardano looks like it may fall into oblivion. Not really much more to say about this chart other than that. It's been that way for a while. It's been stuck in the sideways range, so we're moving on. Next up is Solana. This one's also been stuck in a sideways range, so let me also just be, congruent, I suppose would be the word, with my thoughts, right? When something's ugly, and this is certainly ugly. Obviously, we've got this sideways range, big fake break here, multiple upper wicks, fake breaking up and over our level here at the 3440 mark. Sure, we've got the higher lows, but as soon as this breaches, if this trend line breaches, which does look likely given the inverted hammer that's printing right now, boom, trend line break down to the bottom of the range, testing 3040. And if that goes, you've now just failed the possibility of a weekly double bottom, and you're looking at 2724. So the chart does not look great based on the multiple failed attempts from the buyers up and over the highs. At this point in time, to be comfortable on a long, it's got to be some sort of higher low above that really confirms this now as support, and then possibly for your weekly double bottom, a breach of that 3743, but that does seem like a bit of a stretch given the structure that's unfolding in front of our very eyes. Last but not least, we've got MATIC. What's going on over here? A little bit of a fake breakdown, to be quite honest with you. Snap underneath the level, 74 cents, and then recovering here, but it's not like it's doing anything impressive to the upside. Maybe there's a move over 77 cents on a strong daily bar close above, but look at what's going on here, getting a little bit of an upper wick as we are currently speaking. So that does not seem to me to be a high probability outcome into the weekend and early next week. So the level is still going to be 77 cents. If for some reason it does break out, if crypto sees a major turn to the upside, I would probably look to this honestly to then rotate to our next level overhead, which is 86 cents, roughly a 10-cent move here on something that's priced sub $1. Probably worth paying attention to from a percentage point standpoint. That's a bit of a redundant statement. But anyways, what do we see for the downside, right? Obviously, it's a breach of your trend line to take us here. So underneath 74, I would argue there's probably going to be a little bit of support around 70 cents, but ultimately falling back down to the prior breakout point at 61 cents from back around in here. So watch this trend line like a hawk. If you are trying to play this in the bullish direction, it's got to hold up. It's got to continuously put in higher lows and then possibly break out to the upside. Otherwise, it's like everything else, and it's just building out a bear pennant here. A breach of the trend line will send us lower. That's going to wrap up this week's episode of the Weekend Crypto Report. If you enjoyed the video or learned anything new, let us know in the comments section or by giving the video a simple thumbs up. We will be releasing the weekly watch list video as regularly scheduled, hopefully early Sunday morning. And with that being said, I wish you all a green trading week.